From New York, I'm Bonnie Quinn.
And from London, I'm Guy Johnson. This is Bloomberg Markets. Bonnie, let's go to Chicago now. It's time for Futures in Focus. Joining us now from the CME, Alan Nuckman, who joins us, an editor with Agora Financial. Alan, does the market think up there in Chicago that the Fed is done?
Well, the first thing, let's remember that the market had it right yesterday. There was a 99.5% chance there was going to be a rate cut, and that's exactly what happened. So the commentary is that maybe they'll take a pause and stand back for a bit. But looking at the markets, and the markets usually get this right, there's a 50% chance there'll be a rate cut by March. So there's still, you've got to remember, there's external pressure all times to continue to cut rates to stimulate for certain people's personal interests.
In terms of what the effect of all this is going to be, the dollar's heading for 97 on the DXY. How big a line in the sand is that?
So that was a big deal. The big reversal yesterday, that was rather significant. Everybody's been looking for this dollar downturn. Hasn't happened. In the big picture, we've been trading between 93 and 99 for the year. So 96 is the critical point. But we've pushed down below those, down below these recent lows. I think we're down now near those 4-year lows. So the first step is to break 97. And again, the markets are telling us there's still rate cuts in the future. So that should weaken the dollar. So we'll have to wait and see. My focus again has been on the macro market. It's been nice to see the recent records and this full comeback for those non-believers. We're still in a bull market, and I think that, you know, the combination of the dollar decline and the macro market taking off, that these global growth concerns that have hurt something like crude oil can be alleviated a little bit. So I think from a risk reward, I think there's a lot of opportunity in some of these commodities, and especially the energy sector that's been left behind.
Are people talking about a weak payroll number Friday?
Payroll is payroll. When I was a kid, when I was a young trader, that was the biggest number of the month. You know, there's been obviously consistent, you know, growth in jobs for how many months? Are we looking at how many years? So each and every month, it doesn't really shake up the market that much unless there's a complete surprise, obviously. If there continues to be, you know, the weakness in this job growth, it used to be that people complained if there weren't 200,000 jobs. So, you know, then that maybe can raise the chances of the rate cut. Once again, let's remember that the pressure that the Fed is under each and every day, there's some sort of tweet or some sort of nudge to lower rates. So, you know, do you want to please your boss, or do you want to, you know, try and have some independence? That's the question. But, you know, the markets keep telling us like there's going to be more cuts in the future, which would weaken the dollar, which would help out the opportunity I see, which would help out some of these commodity sectors that have been left behind as we've seen stocks make all-time highs.
Alan, great to see you. Thanks for your time. Alan Nuckman joining us, Agora Financial.